Conducting an annual financial review is one of the most important steps for managing your money and planning for the future. Understanding how your income flows and how your expenses are allocated helps you make informed decisions, achieve your financial goals, and maintain stability. By setting aside time each year to review your finances, you can identify areas to improve and create a clear plan for the upcoming year. Start by gathering all your financial documents. This includes bank statements, investment summaries, retirement accounts, and records of all bills paid throughout the year. Having a complete view of your financial situation is crucial. Use a spreadsheet or financial software to organize all sources of income and categorize expenses. Group expenses into essential and discretionary spending to clearly see where your money goes. Next, review your income sources. Identify consistent income streams such as salary, business profits, or rental income. Check for any changes in income during the year and evaluate how these changes impact your financial objectives. Consider areas where income could increase in the future through effort, planning, and strategic decisions. All recommendations are based on actionable strategies rather than uncertain outcomes. Once your income is clear, examine your expenses in detail. Essential expenses include housing, utilities, groceries, transportation, and health care. Discretionary expenses include non-essential spending such as entertainment, dining out, or optional purchases. Compare current expenses with previous years to identify trends and opportunities for optimization. Even small adjustments in discretionary spending can create significant savings over time. An annual review is also the perfect time to evaluate your savings. Check emergency funds, long-term savings, and retirement contributions. Make sure your emergency fund is sufficient to cover several months of essential living expenses. Review contributions to savings accounts and consider increasing them slightly if possible. Consistent and disciplined saving builds a secure financial foundation and prepares you for future opportunities. Investments should be evaluated regularly. Assess the performance of your investments, focusing on long-term growth, diversification, and halal-compliant options. Ensure that your investment strategy aligns with your financial goals. Avoid speculative or high-risk investments that promise quick returns. Instead, focus on stable, growth-oriented opportunities that are ethically and legally compliant. Taxes are another important component. Gather all relevant documents and verify that deductions, exemptions, and credits are accurately applied. Proper planning can reduce unnecessary payments and ensure that your finances are fully compliant with laws. Consultation with a qualified tax professional can provide clarity and ensure optimization within lawful limits. Setting clear goals for the coming year is essential. Goals should be specific, measurable, achievable, realistic, and time-bound. Include short-term goals, such as increasing monthly savings or reaching a specific investment target, and long-term goals, such as funding education or growing retirement savings. Breaking large goals into smaller, actionable steps increases the likelihood of consistent progress and success. Monitor your net worth by calculating total assets minus liabilities. Tracking net worth annually allows you to see whether your financial strategies are effective. A steady increase indicates that saving, spending, and investing habits are aligned with your objectives. Review lifestyle and spending habits carefully. Determine if current habits support your financial goals. Small lifestyle changes, such as cooking at home, limiting non-essential purchases, or canceling unused subscriptions, can free up funds for saving and investing. Conscious and mindful spending is an important part of responsible financial planning. Consider using automation for savings and investments. Automatic transfers ensure regular contributions to savings accounts or investment portfolios without risk of human error. Automation also helps maintain consistent tracking of recurring bills and reduces the likelihood of missed payments. This practice strengthens discipline and promotes long-term financial stability. Finally, document your annual review thoroughly. Record income, expenses, savings, investments, tax planning, and financial goals. Include an analysis of your financial strengths, areas for improvement, and clear steps for the next year. Keeping an organized record provides reference points, encourages accountability, and helps maintain focus on your objectives. Consistency is key. Conducting an annual financial review once a year is helpful, but regular monitoring throughout the year reinforces good habits. Reviewing your finances periodically ensures that spending aligns with goals, savings remain on track, and investments continue to grow responsibly. A structured annual financial review allows you to fully understand your finances, make deliberate decisions, and plan for the future. Awareness of income, expenses, and investments empowers you to achieve financial stability, maintain ethical practices, and work toward long-term wealth responsibly. Once you have gathered all your financial data and reviewed income, expenses, and savings, the next step is to analyze the information and plan actionable strategies for growth. The goal is to create a clear roadmap for the coming year while remaining fully compliant with halal principles. Start by examining your cash flow. Cash flow represents the movement of money into and out of your accounts. Positive cash flow occurs when your income exceeds expenses, while negative cash flow occurs when spending exceeds earnings. Understanding cash flow trends helps identify areas for improvement and ensures that you allocate funds efficiently. Track cash flow monthly and note any patterns or seasonal fluctuations. Next, review financial ratios to assess the health of your finances. The savings-to-income ratio measures the percentage of income saved each month, while tracking how consistently you reach your saving goals. Maintaining a higher ratio strengthens financial stability. Focus on increasing savings gradually over time by adjusting discretionary spending and boosting permissible income sources. Evaluate short-term and long-term goals. Short-term goals may include increasing monthly savings, contributing to halal investments, or creating specific purchase plans. Long-term goals could involve funding education, retirement savings, or property purchases. Define each goal clearly with measurable targets and realistic timelines. Breaking down larger goals into smaller, achievable steps ensures continuous progress. Analyze spending habits carefully. Categorize all expenses into fixed, variable, and discretionary. Fixed expenses are consistent and necessary, such as rent, utilities, and groceries. Variable expenses fluctuate, such as transportation, groceries, and subscription services. Discretionary spending includes non-essential items like dining out or entertainment. Understanding these categories allows you to make deliberate decisions, reduce unnecessary costs, and direct funds towards savings and investments. Assess your savings strategy. Determine whether your savings accounts are sufficient and growing consistently. Ensure emergency funds cover several months of essential living expenses. Review contributions to savings and consider gradual increases where possible. Consistent and disciplined saving provides security and flexibility, allowing you to plan for future opportunities without relying on uncertain outcomes. Investments are a key component of financial growth. Review halal-compliant investments regularly, focusing on long-term growth, diversification, and risk management. Ensure investments align with your financial objectives. Examples include growth-oriented stocks, sukuk, and mutual funds that comply with Islamic principles. Avoid high-risk, speculative ventures, and focus on stable, responsible investment opportunities. Track performance, evaluate asset allocation, and make adjustments if necessary. Retirement planning is an essential long-term strategy. Review contributions to retirement accounts, ensure they comply with halal principles, and adjust savings levels to meet future goals. Use visual tracking tools to monitor growth over time. Even small, consistent contributions can significantly increase wealth over the years. Tax planning should also be integrated into your review. Organize all tax-related documents and verify that you are taking advantage of lawful deductions and exemptions. Planning ahead ensures you do not overpay and allows for better allocation of funds to savings and investments. Consulting a qualified tax professional can provide clarity and identify opportunities for compliance and optimization. Regularly set and review financial goals. Create specific, measurable, achievable, realistic, and time-bound objectives. Track progress using calendars, dashboards, or visual charts. Include quarterly check-ins to adjust goals as circumstances change. Goal setting enhances focus and discipline, ensuring that each financial decision contributes to long-term growth. Monitor net worth periodically. Calculate total assets minus liabilities to measure financial progress. Regular tracking allows you to assess whether your strategies are effective and make data-driven adjustments. A steady increase in net worth indicates positive alignment between income, expenses, savings, and investments. Review lifestyle and consumption habits. Determine if your current habits support financial objectives. Consider small changes that reduce unnecessary spending, such as preparing meals at home, limiting non-essential purchases, or adjusting subscription services. Conscious spending strengthens your ability to allocate resources toward meaningful and ethical goals. Consider automation for savings and investments. Automate monthly contributions to savings accounts or investment portfolios to maintain consistency. Automation minimizes human error, ensures timely contributions, and reinforces disciplined financial practices. Regular automated tracking of income and expenses provides clarity and supports strategic decision-making. Visualize progress and milestones. Use charts, graphs, or dashboards to see improvements in savings, investments, and overall financial health. Monitoring these milestones motivates consistent effort and provides a clear understanding of achievements and areas that need attention. Integrate charitable giving into your financial plan. Allocate funds for lawful donations and acts of charity that align with Islamic principles. Planning contributions as part of your annual review reinforces ethical financial management and supports community welfare. Charitable giving also strengthens accountability and encourages balance in financial priorities. Continuous learning strengthens confidence and promotes responsible financial behavior. Assess seasonal and future expenses. Anticipate upcoming costs such as education, home improvements, or planned purchases. Allocate funds in advance through savings or halal investments. Planning ahead prevents financial strain and allows for smooth execution of goals without compromising ethical standards. Review financial progress visually. Track income, savings, investment growth, and spending through charts, graphs, or dashboards. Visualization provides clarity, highlights trends, and helps prioritize actions for the following year. Regular visual tracking reinforces discipline and supports better decision-making. Focus on mindful spending and financial discipline. Avoid impulsive purchases and carefully evaluate each expense against your goals. Conscious spending maximizes resources for ethical investments, savings, and charitable giving. Small, consistent choices lead to significant results over time. Reassess financial goals quarterly. Life circumstances, changes in income, or evolving priorities may require adjusting your objectives. Regular reassessment ensures your financial plan remains realistic, achievable, and aligned with personal values. Flexibility combined with structured planning strengthens success while maintaining ethical behavior. Document your annual financial review thoroughly. Record all income, expenses, savings, investments, taxes, goals, and charitable contributions. Include notes on progress, challenges, and actionable strategies for improvement. Organized documentation ensures accountability, provides reference points, and supports consistent growth year after year. Implementing a structured review process transforms abstract financial numbers into actionable insights. Awareness of how funds flow, where savings accumulate, and how investments perform empowers you to make informed, ethical decisions. A well-executed review ensures alignment with goals, maximizes resources, and builds long-term financial stability. Consistency is essential. Conducting an annual review once a year is beneficial, but regular monitoring throughout the year strengthens habits and ensures adherence to financial plans. Monthly or quarterly reviews help maintain alignment with goals, track savings and investment growth, and adjust strategies as needed. A holistic annual financial review allows you to understand your income and spending patterns clearly, increase savings and investments responsibly, plan for future needs and opportunities, track progress towards short-term and long-term goals, maintain ethical and halal financial practices, integrate charitable giving into financial management. By following these strategies, financial growth becomes a product of structured effort, informed decisions, and disciplined planning, not uncertain luck or speculation. This approach provides clarity, confidence, and a sustainable path to long-term wealth, all while adhering strictly to halal principles. Consistency, awareness, and planning form the foundation of financial success. A well-maintained annual review strengthens decision-making, ensures resources are used responsibly, and empowers you to achieve meaningful financial objectives. Ethical, deliberate, and informed actions lead to financial stability, personal satisfaction, and sustainable growth.